So my name is Marc Sadler. I work at the World Bank. I'm an ex-commodities trader. I like to get that one out there early. We can discuss that afterwards. So the World Bank and risk, the World Bank and the planet and risk. So I'm going to immediately annoy you with a slide that's got nothing to do with it. So this is an interesting slide that was showed to over 1,000 top radiologists in the US. And they were shown this slide, and this is their job. They look at scans. This is a lung, cross-section of a lung. And they said, what's the problem? What's wrong with the patient? Well, I'm not going to go on and on, because the other thing I know is I'm keeping you from your lunch, and that's not good. But what the problem is that they didn't find. A lot of them said, well, basically the patient's healthy, there isn't really a big problem, except for the gorilla. Okay. Now, you're standing there and going, what the heck's this is all about, right? So the reality is, especially in the risk field, that we miss the blindingly obvious. Now, there are all sorts of behavioral sciences, there are all sorts of mental models. We can go on for a long time discussing this, but you probably don't want to listen to a commodities trader talk about it. But the reality is that we have certain perceptions of the world. We have a perception that last year it was drought that wiped out corn in the US. It actually really wasn't. What actually really happened was extremely high temperatures, especially overnight, at the time of the pollination of the corn plant in the US. That's what killed the yield. Everyone talks about drought. We talk about 2010 drought in Russia. Wiped out the wheat. Well, it got dry, but what really killed it was sukhove, which is basically a particular weather formation that creates a desiccating wind, and I've seen it in action, and it's terrifying. Literally, you can go from a full standing field of wheat today, and tomorrow you'll come in and the plant is destroyed. It wasn't actually drought. So the big problem around risk is we think we know what the problem is, but we actually don't. And this has been going on for decades. So anyway, we'll move on from the gorilla. But can anyone see the gorilla in the room? Alid pointed out to this, but basically things have changed, right? The prices over here were low and flat and terribly boring, difficult to make a margin for a long, long time. And then things got terribly interesting, and they continue to be interesting. And let's remember, we're still at $6-7 wheat and corn at the moment. So food suddenly became about security. It became national issues. This is the sort of an issue that comes onto the table, the National Security Advisor in the White House. Food. Never been heard of before. We had wine lakes, butter mountains, we had all sorts of things going on, and now all of a sudden we're at the top of the political agenda. So some things have been going on, and it's not just about speculation. I mean, those of you who actually understand the graphs, normally I'm standing here trying to explain the spaghetti to everyone, but down here we have the non-coms. When the prices were up here, they were short the market. They were betting it would go the other way, and they did that continuously. So it can't have just been about people hoarding futures, and apart from anything else, the cash markets did it too. Matter of fact, cash markets are still trading at premiums to the futures, which as an indicator is not a good one if you're in the it's all about the speculator's game. So what is happening? Well, in a good year we eat what we produce. I mean, that's the reality. This is the supply and demand curves, this is where we're going, this is what grain looks like. And at the bottom we can see see down here stocks to use. Well, basically, this is actually stocks as opposed to stocks to use. But the reality is that we don't have big stocks on the planet anymore. And apart from anything else, let's remember that these stocks are sitting in places that are not necessarily liquid stocks. If we have a shock to the international system, they don't move. 50% of the world's grains sit in China and India. They're not actually part of the global trading food system. They're part of our global food system, but they're not going to suddenly turn up in the market anytime soon. Although India, of course, is back in the markets. Arguably, why did wheat not rocket off last year? Well, there was a lot of wheat that was coming out of India. So what's been driving it? And guess what? We're all eating a lot more protein. And I refer back to the conversation about India, but the impact of the consumption of milk in India today is literally an explosion. Everyone sort of writes off India and says, well, they're not going to eat red meat anytime soon. The consumption of animal-based proteins, especially in the dairy industry, is incredible. The curves literally just go straight up. So it's not just about China. This is from a friend of mine who works at Reuters, Gavin Maguire, so I've said that so he can't shout at me for it. But we all talk about China. But the curves, what you're actually looking at here is what he actually refers to as MIST, which is Mexico, Indonesia, South Korea, and Turkey. Well, hang on a minute, lots of scratching of the head. Don't these people also produce lots of food? Well, they do, and Turkey's agricultural economy is absolutely booming. The reality is that so is their processing industry, and they simply do not produce enough for their processing industry, so they're starting to become a big importer. So it's not just about biofuels, right? This is delta change. This is how much more grain we produce between 2000 and 2012, and the green bit is what went to biofuels. Biofuels was the impact at this time. If you're a macroeconomist and your world works in 100-year cycles, then you call that a shock. And that's why we often see it referred to as a demand shock. If you're in the markets of today, you can see this thing coming like an express train. But it's not just about demand, right? No, things keep on going wrong. Okay, so the thing here, and the thing that I always get picked up on, is number of reported occurrences. Yeah, that's true. So the media got much better about telling us what's going on the planet, and now we start seeing much higher frequencies, but the reality is that that's also a true story. Frequencies are increasing. So I put this map up and people say, yeah, but the weather's always been changing, right? Weather changes, agriculture gets hit by weather. Yeah, okay, well, I agree with that comment, but normally the number of, and these are big impacts, these are not small localized, these are sort of the stuff that hits the global food system. This is what happened in 4 years. Normally, that's what we'd have seen in 20 years. And our system can't keep up. Think back to the original curves that showed supply and demand. That's why we can't keep up when these shocks come, and they're coming more frequently. But we just got unlucky. It's just an unlucky time. Well, probably not, because we're going to eat a lot more. 9 billion people, 2050, consumption's going up. We're going to consume a lot more. What I can refer to as the conversion ratio of food. We take a lot of carbohydrates now and turn them into proteins. And depending upon the protein vehicle that you use, it can take from 6 to 8 to 12 kilos of carbohydrates to produce that 1 kilo of protein. We have a huge conversion impact that's actually putting pressure on the global food system, especially the grain system. Climate change is just going to make it harder. Those places where we think, yes, food's going to grow, this is what we normally see, this is all good. This is actually taken from the 2010 World Development Report, the World Bank. Lots and lots of these sorts of pictures. But what you can see is where we're getting, effectively, this is change in yields. So when it's red, it's bad. Okay, big chunks of Latin America. Over here, Africa's not looking so hot. This is all looking a problem. Okay? Climate change is going to impact global agriculture. There is no doubt about it. It's no longer a discussion or a debate. It impacts it because of various things. One is an increase in average temperatures. Big problem is overnight temperatures. But the real thing that kills animals and plants is extremes. And the frequency and the amplitude of those extremes is going up. And we're currently living through it. So what do we do? Well, don't panic. This is one of these crummy slides that I found, but I just put it in there. So we get organized, right? And as a global system, we do need to get organized. Okay, I continually hear, it's crisis, it's crisis, it's crisis. Okay, enough of the crisis already. We've got to do something about it. This is the new normal. This is the way that we're going. This is what the planet is giving us. Did we create the planet? Who knows? But it's the reality today. And a lot of our clients are dealing with exactly these problems. So in the short term, I'll flick through this, you've got to manage risks. And you've got to understand that there are trends and there are uncertainties. There's certain things you can manage, certain things you can't. You've just got to be aware of what's going on. So you've got to work out what's going on with risk, and you've got to get ex ante. You've got to get ahead of the curve. You have to move the curve of time. And we have to stop being fatalistic about, oh, well, it's not quite warm enough, there's too much rain, there's too little rain. Come on, we can do much, much better. We have probabilistic modeling, we have crop models, we know how plants behave at those three, phenology is even a science, but at 3 crucial stages of plant development. We knew exactly what would happen to the corn crop in the US because it hit at the pollination stage. What happened thereafter was kind of a little bit irrelevant. But it became a talk about drought. And that was a little bit of a red herring. And this sort of picks up on what Aled was saying, but basically we need to get much better data, we need to get much better knowledge, and we need to get much better dialogue going at the international level about knowing what's going on and what's coming up down the pike. So in the long term, of course, well, we need to move away from firefighting to actually getting into some systemic change. You just can't keep on trying to stick plasters on the system. We've got to change the way, in many ways, that we actually do agriculture. You know, we need higher yields, we need it in a more resilient way, and we need to actually be producing some climate positive outcomes. Agriculture produces about 30–32% of GHG emissions. That's the reality. So we're actually feeding a system in which we work that is impacting back against us. We've got to do something about the emission side of agriculture, and it can be done. We just need to actually work on that. And we need finance policies and technologies, obviously. So this was the stepping off the intellectual cliff bit. This is what I do for a day job, which is really about, okay, well, what do you do about risk? You know, we can talk about it. We've got models, et cetera, et cetera. So anyone who's into systems dynamics, anyone who does anything like that, I immediately apologize for this. So let's just think of a food system. Food going one way to consumers, money going back the other way. And let's think we hit it with a problem. We hit it with drought. What happens when we hit it with drought? Well, we get price risk. So, you know, the weather risk now became a price risk. Consumers are getting hit because prices are going up. What happens to that risk? Well, all of a sudden we forgot someone. We forgot the government. And they get hit by a new risk. They get hit by political risk. This thing starts to cascade through the system. So what did the government do? Well, intervene in markets. And how do they do that? Well, they price controls and trade controls. And what's the impact of that? Price risk. Oh my God. The price risk comes back down the chain. All of a sudden, we put an export ban in the country and the price of maize falls from, I was about to use a currency, I've got to be careful, from 30 units to 10 units, because otherwise I'd have given away which country I was talking about. But basically, all of a sudden, the producer's not getting paid for what he's got. So it's about producers, consumers, and government, right? Well, funnily enough, it probably isn't. Because when the farmer's got no more money, or when he's actually lost all his crop, he now becomes a default and counterparty risk. For who? Ah, the input suppliers, the banks, and the traders. But of course, this thing just keeps on cascading, because now the processors can't get hold of it. They may have had a long-term supply contract with a trader, he's been defaulted on, the farmer doesn't have the crop, and this thing starts to spin around. So we're in a system, we're in a risk of systemic failure. This is a country-specific example, just looking at one endogenous risk, one risk in that country. So it looks like the whole thing's going to hell in a handbasket. What happens? Well, the government start to get really concerned. And guess what they do? They go back to intervening in markets, price controls and trade controls, and we end up actually with what we call a negative feedback loop. We end up with a vicious circle. And of course this is a self-reinforcing, but also the problem with the systemic risk is it ends up going back to the producer, who now can't get access to credit, can't get access to inputs, has lost his land, and on we go. So the important thing about this story is this was one incidence of an endogenous risk, which was drought. Now, I didn't actually produce the other slide because it would have taken too long. But what happens in agricultural systems, as we know all the time, is that a number of risks hit the system in any one given season. And then we layer on a whole bunch of exogenous risks that are coming from outside. The way this system works just creates a cacophony of sound. And what's been a problem is no one's ever really unpacked it. So along we came with a bright idea. Anyone who's into enterprise risk management, etc., will pick up a lot of these sort of basic concepts. We've got to unpack it. We have to look at it. I used to do agricultural investments many years ago, and yeah, we kept on missing the point because we didn't unpack it in the right way. It's back to the gorilla in the brain scenario. We know what we're doing. It's okay. Well, funnily enough, we probably don't. We've got to get much more strategic, and we've got to get much cleverer about how we actually unpack risk. And that's the physical side, and it's the financial side, and it's about modeling, but it's also about common sense. So the way we unpack it is there's three players. We only ever talk about three things, probably because I can never remember more than three things. But basically, producers, commercial sector, and the public sector, they're part of a system. Any solution to manage risk is going to require all three of them to work together. Just government going getting insurance, a derivative, is not actually going to solve the underlying problems. Strategies, you can mitigate it, you can transfer, and you can cope with it. The reality is in agriculture that your abilities to effectively transfer, I mean this is insurance and hedging, are relatively low. Imagine if all the cars, every time I say this, someone in the audience then has a car crash, but anyway, don't drive home. Imagine all the cars in London today had a car accident and they were total write-offs. Imagine what would happen to the car insurance industry. That happens in agriculture all the time. That's why premiums in agriculture are incredibly high, even when we're just trying to pick up tail-end risk. So it's a difficult proposition, and it's an incredibly difficult proposition in most of the clients that I deal with, where there's no value proposition in the underlying commodity. The value proposition is whether they starve or not. It's not a commercialized, there is no money, this isn't what it's about. So most of the stuff is really about mitigating. It's about investing in drainage, irrigation, veterinary services, seeds, doing the things that Aggies do, but never really talk about in a financial sense. And very quickly, a lot of this goes back to a meeting I once had with the government in Morocco, where basically they've been facing a $3 billion contingent dollar loss, but they didn't know about it because no one had actually put it in dollar terms. They put it in terms of the number of sheep that would probably die. So the Minister of Finance, all he heard probably in that conversation was blah, 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 blah. If someone had said $3 billion contingent loss, I think they might have acted in a different way. So part of this is translational and it's about language. But it's basically about dollarizing agricultural risk. And coping strategies. On an ex-ante basis, if I invest money today, I'm going to save a lot more money. And this is really about asset shedding. We see all the livestock suddenly being sold off. This is about getting ahead of the curve and having financial provisioning and physical provisioning in place. It's also about organizations like the World Food Programme. There's 3 layers of risk: production, up to market, market risk, and enabling environment. That's a soft way of talking about policies. In East Africa, some of the biggest risks in the agricultural system are actually export policies. And that's just the reality. And then the 3 things that we at the World Bank can do about it: invest, technical assistance, and policy advice. So you're still wondering where that lunch went, so let's just quickly get through it. But basically it's 3 layers of risk, there's 3 people involved, there are 3 things you can do about it. We'll probably have access to the presentation afterwards anyway. There's 3 layers of a loss curve. I mean, everyone's seen one of these things, right? Here it is. This is the stuff that happens all day long in agriculture and continues to go on. The answers in that box are largely agricultural answers. The trouble is, in the development world, we keep on trying to shove this piece of the layer into this piece of the layer, and guess what? Insurance can't cope with it. It's just too big. You cannot swallow this stuff at any price that makes any sense. And the coping at the tail end. This is the thing: we go into countries now, we basically unpack 80% of ag GDP, bringing in all these subsectors and bringing together how these systems interact. It's half art, it's half science, and it's a big headache. But at the end of the day, what we're doing is we're unpacking some of the things that are going on. And Niger was a good case in point. So if you look at GDP growth and you look at GDP per capita growth, and when it went up and when it went down, funnily enough, when it went down, things were going on in the agricultural sector. Drought, but also political instability. That was 99. Drought and locusts, drought here. Political instability. Niger's agricultural sector is heavily driven by political instability and what's actually going on in Nigeria. So we unpacked all these things, and everyone said, well, that's great, it's terribly confusing, but what does it actually mean? So we came up with what was now referred to as the $123 million slide. It really changed the whole dialogue with the government in Niger. My manager, or the manager in Africa, turned around to me and said, what, you went to Niger and you came back and your answer was they have a problem with drought? Really? Come on, everyone knows it's a drought problem, right? Yes, correct. Problem. They didn't know how big a problem it was. That big balloon. These big balloons are amounts of money that they are losing from their economy. So we've got frequencies and we've got amounts. That was shocking to the government. The other thing we need to remember, we all talk about government. Government is made up of a number of individuals. They regularly come and go, even the technical staff. So your assumption about what government knows may not be the reality of what government actually knows. And quite often, and this sort of analysis is not necessarily on the table. Plus, remember the gorilla in the room. Now, every time we go somewhere and say, what are your biggest risks? I guarantee you it's what happened last. It is not the biggest risk. And there's a lot of very clever scientists who've done lots of behavioral experiments on exactly that thing. People don't know. They really don't remember. They remember what happened to them last week. They don't remember what happened to them in all the preceding months. So then we filter all the potential things that you could do about it. and we start coming towards basically a pipeline of the things that you really need to focus on. If you want to affect systemic change, and this is the same thing, we do this actually on a supply chain level as well, come in and pull a supply chain apart. We did it with cocoa in Ghana, for example. You look at where are the systemic drivers? Where do you really put your money and your effort in a sustained way to affect systemic change and take the risk out of the system, or at least manage it? And you end up with this sort of list. So that was all a bit. Oh right, agriculture is risky, but you can and need to make your own luck. Right? I always find it amazing how fatalistic people are still in agriculture. When using phenology, using remote sensing, a model plus some data can literally tell you exactly what is going to happen in 9 months from now with a very high level of probability. We're always shocked. We were shocked about the disaster in the Horn. We weren't shocked. We were telling people exactly what would happen, and we can tell them in exactly which districts it's going to happen. So the issue is moving that political dialogue in parallel with the level of knowledge that we actually have. Unfortunately, we still live in a world where the CNN film crew taking pictures of starving children moves money, moves political debate, and suddenly gets action going. 9 months before, could have told you exactly which districts where those starving children would have been in. So you can manage your luck, but whatever the weather. Hopefully you can now get your lunch.